Hello traders, Gary Wagner here just before 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, December 12th, 2017, and this is the Daily Report for gold and silver. Although both gold and silver did close lower on the day, that's in the futures markets. They closed well off their lows. For example, 1238.30, that was the intraday low that was achieved today in gold trading, but it firmed up to close at 1246.30. That puts it off about 60 cents. Spot gold is currently trading up about $2 on the day. Silver also trading lower, but well off of the lows of the day, closing down about 4 cents at 1574. And that is in light of a risk-on environment with the US dollar trading marginally higher, up about 0.2%, 94.03, and new record closes in both the Dow and the S&P, with the Dow closing at 24,504, that's up 118 points, and the Standard & Poor's 500, 2664, a net gain of 4 points on the day. Lastly, Bitcoin did close higher, up about $312, closing at $17,552. However, futures being traded at the CBOE did close off, down by about $545 as cash Bitcoin pricing, I guess you would call it, and futures pricing comes into alignment. Traders, gold did trade to an intraday low this morning of $1,238.30. That lines up precisely with the 78% retracement level. And of course, this retracement level is of the last major rally experienced in gold, $163 total move from about $1,200 to $1,363. What I find so interesting about today's action is the fact that after hitting the intraday low, we had a pretty stiff recovery, with gold now trading, even though it's in the negative, it's only negative by about $1.10, currently at $1245.80, well off of this morning's lows. This puts today's low at a very critical retracement level, the 78% retracement level, because this would be a logical point in which we could in fact see a bounce or a key reversal back to the upside. And if this price point cannot hold, this puts today's low at a very critical retracement level, the 78% retracement level, because this would be a logical point in which we could in fact see a bounce or a key reversal back to the upside. If this price point cannot hold, at least on a technical basis, it would signal further downside erosion in gold pricing. And I believe if that is the case, the next real level of support that we would look at wouldn't fall until the market hit approximately $1,200 per ounce. And that, of course, is based upon lows achieved in July of this year. Of course, traders and market participants will focus intensely on the statement released immediately following tomorrow's conclusion of the FOMC meeting to get some sense or insight into the monetary policy that the Fed hopes to enact in 2018. It is highly anticipated that the Fed will also announce a rate hike, the third of 2017, and for the most part, that rate hike has been factored into the market. In fact, the CME's FedWatch tool puts the probability of a rate hike tomorrow at over 90%. So I would expect the majority of traders to be on the sidelines awaiting the statement, which will be released at the conclusion of tomorrow's meeting. We continue to be in a risk-on environment with the US dollar gaining strength today, and we are at a current level of potential resistance at 94 even. Dollar index currently pegged at 94.04. This is a 61% retracement, and it is a retracement from the highs achieved back on the 2nd of last month down to these lows of 92.45. And it is quite clear that at least on a tentative basis, this risk-on environment in U.S. equities is firmly in place, with the Standard & Poor's 500 currently trading at a new all-time record high, this being expressed through the E-mini at 2668, putting it up about 3.5 points, or a net gain of a little bit over 0.1%. The Dow Jones Industrial Average is also gaining steam, also set to close at a new all-time high at 24,505 points. Traders, of course, tomorrow we will read the last statement to be issued by the Fed for 2017. While it is widely anticipated that we will see the last rate hike of this year, and that's pretty much been factored in the market, what traders and market participants really want to glean is the monetary policy that the Fed plans to put forward in 2018. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review.